Now let's bring in Dan Ives, Wedbush Securities Global Head of Technology Research. More on Tesla and Microsoft as we're still waiting for Meta's results. Meta's late, but Dan Ives, Tesla is here and it's way off the lows here, now down just 2% after missing on the top and bottom. Is it about these cheaper vehicles?
Yeah, I think there's two key things here. One,
Dan Ives highlights Tesla's focus on lower-cost vehicles and advancing its autonomous technology, including robotaxi production by 2026, as key to driving future growth despite softer earnings. He sees Tesla's AI-driven initiatives as a path to significant long-term value. Microsoft's strong AI momentum, with projected Azure growth and major AI investments, positions it for success in the evolving tech landscape. Despite minor headwinds, its $80 billion capital expenditure reinforces confidence in its AI-driven future. For Nvidia, Ives discusses challenges from emerging competitors and potential export restrictions, but emphasizes that continued investments in AI infrastructure and innovation will sustain the broader AI industry's growth.
Committing first half of the year that they're going to produce those. I think there was a lot of concern that they weren't. This potential could push out in 2026. They doubled down there. And then the other thing that's important in terms of cybercab and autonomous, basically saying robotaxi, you'll start to get parts later this year, full volume production 2026. That, look, 90% of the story right now, it's about AI, autonomous, cybercab, what I believe is at next level. Obviously, numbers itself a little sort of soft, but that's the key. I think this is probably a stock that's going to be up tomorrow.
Microsoft's also off the lows. What matters here, particularly in the commentary, this is a earnings call where we get a lot more on guidance.
Yeah, of course. And this is one you always really have to wait till guidance, but $13 billion. In terms of that AI trajectory, I mean, that's really what the street's focused on, because this is something that's ultimately going to be 20, 25, ultimately 30 billion. That's what's driving this Nadella and Microsoft story. And even though if you look at it, you talk about currency, that could be a bit of a headwind. I think this is one Azure growth actually accelerates. I think the conference call is going to be bullish. They doubled down on the 80 billion in terms of CapEx, especially this week, hearing with DeepSeek and everything else. I think this is another one. I look at this numbers, I feel more bullish because that ultimate AI number, I mean, that's really the lotto ticket right now if you own Microsoft.
I want to go back to Tesla for a second. How important is it, given everything that he is focused on right now, including in Washington, for Musk to be on the call? And when you do think about something like robotaxi and autonomous driving, especially on a day where Waymo is announcing that it's going to expand its own taxis to 10 new cities, how much now hinges on that policy green light happening with this administration?
Yeah, I mean, look, it comes down to the deregulatory environment, the Musk bet on Trump, in terms of the bet for the ages. Now you need to see it in terms of the autonomous roadmap from a federal perspective. It is important. Obviously, Musk is on the call, talks about robotaxi, talks about ultimately the timeline there, the view of autonomous, unsupervised FSD. Look, Morgan, these are really the things that are going to drive the stock. I mean, look, earnings itself are important in the next quarter or two, but I believe when you look out, I believe the AI autonomous story, that's worth $1 trillion alone. That's really going to be front and center on this call, along with what John asked about first half of the year, making sure doubling down these lower cost vehicles are out there. That's how you get to 20, 30% type of volume growth in 2025.
Given the fact that we had this DeepSeek shakeout in the market to start the week, we just got some comments from some of the CEOs, tech CEOs that John just spoke to with earnings. We're still waiting on Meta. Zuckerberg just earlier this month actually had some interesting commentary on the Joe Rogan podcast about DeepSeek. How to think about what this does to drive down cost and who the beneficiaries are going to be, because there are going to be beneficiaries. Just thinking about some of the comments from ServiceNow, for example.
Yeah, and look, I mean, it comes down to that 65 billion. They're going to reiterate that probably 3 times in terms of CapEx for Meta and Zuck, 80 billion from Microsoft. Look, DeepSeek, it was a scare. And I continue to view it, it's bullish for the overall AI revolution, because going back to ServiceNow, Palantir, Salesforce.com, it's the use cases, it's software. That's not slowing it down in terms of what we saw in DeepSeek. And I think if you look at that, it was a shot across the bow. But ultimately, what we're going to look out in the next week or two in terms of earnings, the AI revolution is actually accelerating. And I think that is really going to be sort of a narrative that we hear even tonight.
Evercore's, defending all this today. They call it generally a buying opportunity.
But Nvidia, this was inevitable, and it's always been part of my thesis and why I don't have a big position, regrettably, because I would have made a lot more money in the stock. But part of that $80 billion in capex that we're hearing, the $65 billion in capex, I'm guessing, unless it's somewhere else, going to be somewhere else in your income statement, is going to develop of competing chips and cheaper ways to build out their AI capabilities. So it's no surprise. The only surprise with Nvidia is the timing, because they were not going to be the first semiconductor company in the history of the world to maintain a technology lead forever.
No, but of course not. But the speed in which we are asking this new question is largely unprecedented.
Well,
right?
But the price at which the stock was selling implied that the monopoly could go on for a very long time, which is why we didn't own Nvidia. And, maybe
you missed a lot. You missed a lot.
I understand that.
There's another.
Also, reports out of Bloomberg that the government may also be working on tighter export controls for Nvidia chips. You see those shares moving down to session lows, just a little bit more than they had been, but enough probably to put some further pressure across the whole markets. Remember, Nvidia's sales of chips to China specifically are a big question mark for analysts who are trying to figure out what its revenue and earnings exposure are going to be in the next couple of quarters. They were able to kind of thread the needle on export controls earlier. That's in part how DeepSeek was able to still use those chips to create its latest large language models. If there is a further tightening, though, that would certainly be a business headwind for them. Let me just sneak in a quick mention then about, while we have you, about Nvidia. So again, would it represent a big earnings revenue headwind for them if the government clamps down further on their China sales?
Yes and no. I mean, remember, we've done the calculus on China and Nvidia and what it's meant and where those export controls already were an impact. I think the bigger issue is I wouldn't say it's existential, but what we had with DeepSeek over the last few days is one where are your biggest customers, has everybody overspent for CapEx, et cetera. That's the story with Nvidia. It's less to me about export controls in China. I'm sure the company's going to say and do and feel that they want to do everything that's on the right side of that. I'm less worried about that.
All right, let's get to Nvidia here. Interesting move in Nvidia, down 4% today in the regular trading session. Up, though, after hours. Bloomberg reporting the White House is considering tighter curbs on its sales to China. Megan Casella's got the details here. Megan.
Melissa, that's right. So that Bloomberg report says that Trump officials are having what they called early conversations about putting additional restrictions on Nvidia's chip sales to China, and specifically focused on the H20 chips. These are those scaled down AI chips that had initially been designed to get around current U.S. export controls on Nvidia's sales to China. The company saying in a statement this afternoon that the Biden administration's thresholds, they say, had been set on performance levels reached 5 years ago, and that it's ready now to work with the administration as it pursues its own approach to AI. Now, the White House and Commerce Department did not respond to my request for comment on that report, but I would caution that it's very early for any decisions on export control policy. No one is yet leading the Commerce Department or even the Export Controls Office within Commerce for the administration. So we're in very early stages here. I will add, though, Commerce Secretary nominee Howard Lutnick did today say in his confirmation hearing that he will be very strong and rigorous in his approach to export restrictions toward China in order to ensure that the U.S. remains a leader on AI. So it could suggest that this type of policy will be supported moving forward.
Hey, Gene, you just mentioned, it's NVIDIA being a beneficiary of all this. We know that, right? So a couple weeks ago, Microsoft, Meta, they gave their CapEx guidance for the year. So here we are, they're reiterating it. And, let's see how this stock, how far it could run a little bit if it could fill in that gap from Monday. But, going back and looking at that chart over the last 3 years since it really took off, there's not a single gap to the downside. There's plenty to the upside. So I guess the question here is it going to be enough as far as this guidance is concerned, given the headwinds that we might be seeing around the globe with some of these open source models out of China? Is there a chance that the trade is just done for a bit?
So this is specific to NVIDIA, or the NVIDIA, maybe the broader AI trade. I think, again, we're piecing together data points real time. That's what happened with DeepSeek, is it was one data point and the market had to extrapolate it I think out to several years. Now, since then, we've had some more data points, and like you said, with Nvidia and their business, and I think the bottom line is this: is that if CapEx infrastructure continues to remain strong, we're going to see models, even if they're novel models like we saw from DeepSeek that can be produced at lower prices, they're still going to want to build the infrastructure to get those models out faster. So if we continue to see that, I think that this is that build out, which is what we're hearing tonight from Zuckerberg. If we continue to see that, I think that not only will the hardware spend more broadly continue, but I think that the software piece is going to start to play out. And so I think that this broader AI trade is still very intact.
Tesla and Microsoft are advancing their AI strategies despite short-term hurdles. Tesla focuses on scaling lower-cost vehicle production and launching robotaxi by 2026, highlighting its push into autonomous tech. Microsoft, with $80 billion in CapEx and Azure AI growth, positions itself as a leader in the expanding AI revolution despite minor headwinds. Nvidia faces challenges like tighter U.S. export controls and rising competition, but remains central to AI infrastructure growth. Significant investments by Microsoft, Meta, and others in AI hardware and software underline the market's continued expansion. Can Tesla's focus on autonomous vehicles secure its leadership in the EV space? How will Nvidia navigate growing competition and regulatory pressures in the AI chip market?